Hello and welcome to this August 12th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are looking at Garmin, ticker symbol GRMN. This is about a $5.6 billion technology company. You can see that the stock had been in a downtrend since really the early part of May when we had touched about $39. We ran all the way down to the low at the end of July, down below $28, and put in a positive divergence. Now, some of you may look and say, well, why are you drawing the lines here? But keep in mind that the MACD, the moving average convergence divergence, is based on closing prices. So when you look at the candlesticks, these hollow candlesticks, the closes are actually at the top of the hollow candle body. So when you're connecting the lowest closes, it actually goes from this red candle back in early July to the top of this hollow candle body at the end of July. Those are the two lower closes, and you can see the MACD was much higher. So we had a positive divergence. What we look for on a positive divergence is a trip to the 50-day moving average. Well, take a look at what happened. About 7 or 8 trading days later, we were right up there. We actually tried to break out. I could have drawn a line right here. You can see this prior low back in June, which was at about 31.25. Take a look at this move to the downside here. When we took out 31.25, that now becomes resistance. So as you come up here and you can see this tail that goes above the 50-day moving average, we actually went up, we tested this resistance area, and then reversed back down pretty hard. Now on Wednesday, we came back down and closed below the lowest candle body that we had over the last 6 months. So it looks like on this breakdown, Garmin is probably going to head back for the November 2009 low, which was back near $25. You don't see it on this chart because we only go back 6 months. But if you look at a chart and go back to November, you'll see that there was a pretty significant low that went in back in November. So that's where it looks like Garmin could be headed in the near term. This breakdown below the prior support level was accompanied by pretty big volume, and that helps to confirm the downside action. So I would look for Garmin to struggle. If you're bullish the stock, or if you're looking at it from a bullish standpoint, you really want to get back up and reclaim this price support level quickly, meaning within the next day or so you really want to get back up above. But even if we do go back, I think that Garmin's going to struggle at gap resistance at around $29. So I like it. I like a short position from the current price up to maybe around 29. If you break above 29, you could give it maybe if you were in on the short position between 28 and 29, I might take it all the way up to the 20-day moving average. But now that the MACD has reset on this 50-day test and it's starting to turn back down again, I actually think that the sellers are grabbing control here, and I expect to see Garmin lower in the near term. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.